Hey everyone, welcome back to the channel. Today we're diving into some of the biggest stories shaking up the business world. From Elon Musk's Tesla facing major challenges to a $24 billion private equity deal for Walgreens and a leadership shakeup at 7-Eleven, there's a lot to cover, so let's get started. Let's start with Elon Musk and Tesla. The name Elon Musk has become synonymous with innovation and disruption. From revolutionizing online payments with PayPal to launching rockets with SpaceX, Musk has always been at the forefront of technological advancement, but his journey with Tesla, the electric car giant, has been nothing short of a roller coaster ride. This year has been particularly rough for the electric car giant. Despite the initial promise and the groundbreaking technology, Tesla has faced numerous challenges. From production delays to quality control issues, the company has had its fair share of hurdles. And these problems have only been compounded by external factors. Tesla's stock has dropped by 54%, wiping out over $100 billion from Musk's net worth. Ouch! This dramatic decline has sent shockwaves through the financial world, leaving investors and analysts scrambling to understand the reasons behind such a steep fall. The stock market is a volatile place, but such a significant drop is alarming. But here's where it gets interesting. Musk's political moves might be making things worse. While Musk is known for his bold and often controversial statements, his recent political affiliations have raised eyebrows. His actions have not only affected his personal brand, but also the perception of Tesla as a company. Musk has been cozying up to former President Donald Trump, even donating over $250 million to Trump's campaign. This move has been seen by many as a strategic attempt to gain favor with the political establishment. However, it has also alienated a significant portion of Tesla's customer base. At first, this seemed like a smart move. Tesla's stock surged after the election. Investors were optimistic, believing that Musk's political connections would lead to favorable policies for the electric vehicle industry. The initial boost in stock prices was a testament to this belief, but now, it's backfiring big time. The initial optimism has faded, and the reality of the situation is setting in. The stock market is unforgiving, and any misstep can lead to severe consequences. The recent decline in Tesla's stock price is a clear indication of the market's reaction to Musk's political maneuvers. Tesla's brand is taking a hit, especially in Europe and liberal-leaning US states. These regions have been strong supporters of electric vehicles and sustainable energy. However, Musk's political affiliations have caused a rift, leading to a decline in Tesla's popularity in these key markets. Why? Because Musk has been supporting far-right political groups, like Germany's Alternative for Germany party. This has not gone down well with many of Tesla's customers, who value the company's commitment to sustainability and progressive values. The association with far-right groups has tarnished Tesla's image. Add in protests at Tesla showrooms, and you've got a recipe for disaster. The protests have been a visible manifestation of the growing discontent among Tesla's customer base. These demonstrations have not only affected sales but also the overall perception of the brand. Even Trump's recent attempt to help, by posing with Teslas at the White House and promising to buy one, hasn't stopped the bleeding. While the gesture was meant to show support, it has done little to alleviate the concerns of investors and customers alike. The damage to Tesla's reputation has been significant. Let's be real, one car sale isn't going to fix a company that's lost over half its value. The challenges Tesla faces are deep-rooted and multifaceted. It will take more than a few symbolic gestures to turn things around. The road ahead for Tesla is fraught with challenges, and only time will tell if the company can navigate through these turbulent times. Next up, let's talk about private equity. This sector is known for its high-stakes investments and strategic maneuvers. Private equity firms often target companies that are struggling or undervalued, aiming to turn them around for a profit. It's a world where big risks can lead to big rewards, but also significant losses. Recently, Sycamore Partners made headlines with a massive $24 billion deal to buy Walgreens Boots Alliance. This acquisition is one of the largest in the retail sector in recent years and has caught the attention of industry analysts and investors alike. This is Sycamore's biggest move yet, and it's a risky one. The firm is known for its aggressive strategies, but this deal could either solidify their reputation as savvy investors or expose them to significant financial peril. Sycamore's strategy is simple: buy struggling retailers at a low price, split them up, and sell off the profitable parts. This approach has worked for them in the past, allowing them to extract value from companies that others have written off. They've successfully implemented this strategy with Staples, Talbots, and Ann Taylor. Each of these acquisitions allowed Sycamore to streamline operations, cut costs, and ultimately sell off parts of the business for a profit. But Walgreens? That's a whole new level of risk. Unlike their previous acquisitions, Walgreens is a massive global entity with complex operations and significant market challenges. Walgreens has been struggling with competition from Amazon and other online retailers. The rise of e-commerce has significantly impacted brick-and-mortar stores, and Walgreens is no exception. They've had to adapt to a rapidly changing retail landscape. And with markets taking a downturn, this deal is looking even riskier. Economic uncertainty adds another layer of complexity to Sycamore's ambitious plans. Investors are wary, and the pressure is on to deliver results. Sycamore plans to split Walgreens into its US and UK businesses, but will that be enough to turn a profit? The idea is to focus on core strengths and streamline operations, but the execution will be key. Only time will tell if this bold move will pay off, or if it will become a cautionary tale in the world of private equity. Now let's shift gears to Japan, a country known for its technological advancements and bustling urban centers. Here, 7 & I Holdings, the parent company of 7-Eleven, has had a tumultuous year filled with unexpected twists and turns. They faced a staggering $47 billion hostile takeover bid from Canada's alimentation Couche-Tard, a move that sent shockwaves through the industry. This was followed by a failed $58 billion management buyout attempt, adding even more drama to the already intense situation. In an effort to stabilize the company and steer it in a new direction, 7 & I has appointed Stephen Dacus as its new CEO. Dacus has deep roots in the 7-Eleven family, having grown up working at his father's 7-Eleven store in California. This hands-on experience has given him a unique perspective on the business. Despite his extensive background, shareholders remain skeptical about his ability to lead the company through these turbulent times. The big question on everyone's mind is, can he really turn the company around and restore investor confidence? Investors are particularly concerned about Dacus's involvement in the special committee that evaluated Couche-Tard's bid. They wonder if his role might have influenced the decision-making process. Some critics argue that Dacus should have stepped down from the committee to avoid any potential conflicts of interest, ensuring a more transparent evaluation process. With 7 & I's stock price remaining stagnant, the pressure is mounting on Dacus to deliver results and prove his leadership capabilities. As the shareholders' vote on his position approaches in May, all eyes are on Dacus. He has a lot to prove, and the future of 7 & I hangs in the balance. So what do you think? Is Elon Musk's political strategy hurting Tesla? Can Sycamore Partners turn Walgreens around? And will Stephen Dacus be the savior 7 & I needs? Let me know your thoughts in the comments below. If you enjoyed this video, don't forget to hit that like button, subscribe to the channel, and ring the bell so you never miss an update. Thanks for watching, and I'll see you in the next one.